This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade after Thursday's session, we welcome in our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you again, sir. Hope you're doing well.
Oh, Jesse, we are. Thank you. And it's good to be here. Interesting day in the markets today. Everything kind of had red in front of it, at least in the grains, and a little bit disappointing there. But even livestock, we had some jumping feeders, but no firepower in live cattle or hogs. So kind of a sluggish day, I guess is the way to term it.
Yeah, and it's kind of just, it started that way. It started really sluggish Thursday morning, and then especially the grains, we just continue to drift lower. And, you and I were chatting before we went on the air. Didn't really feel like there was a whole lot of news out there, but there must have been just enough maybe on the leaning the bearish side to give us some pressure, especially in the bean complex and in wheat on the day Thursday, Bryan.
Yeah, and corn too. I'll address that because we had a bit of a punch higher yesterday and then not much of a close. And then we saw the same thing here. We had a pretty good overnight going. We had a pretty good jump. And then as we went into the pause session, things were off again quite a bit. So it seemed like the last two sessions in a lot of these grain row crop markets, there's a lack of new news. The sellers sort of probed it, and it seemed like they kind of won the battle today. Probably it's Thursday here, so if you kind of look at the Pro Farmer Tour this week and use that as a guide, it found some really challenging areas early in the week, and the market reflected that. And then maybe some better or more consistent corn and soybeans in Illinois and Iowa. Not a surprise, but what is interesting though, Jesse, is we kind of look at this big picture. Corn is off here today, but keep in mind closing at 650 today. Again, we've been kind of challenging that 670 area. Did hit some topside objectives, inverted head and shoulders formation, a few of these things that when it got to these levels, it just couldn't bust through. But the thing to remember is the low is still down under 565. So we're way off the low, reflecting what the weekly crop ratings basically indicated was another 2% decline this week in good and excellent corn, down to the fourth lowest in 20 years. And then you look at the poor to very poor ratings, 18%. And again, I mean, simple math, simple vision, that's basically 1 out of 5 fields you drive by that just isn't very good. That doesn't kind of set the tone for surprisingly strong yields this year.
No, it does not. And you mentioned, 650 on December corn. To me, again, that feels like a pretty good level here. Now, we kind of just feels like you alluded to, found some resistance here as we got that early week run up in the market. 650 corn, does that feel like maybe a spot this market could hold here heading into harvest possibly? What are your thoughts, Bryan?
Yeah, it's an awesome observation. In fact, I was talking to customers all week about this, Jesse, and to kind of finish the story with them is that, hey, if we look at where we are this week, around 650-ish, 660-ish, this is kind of generalized, 670. For several months, we'd trade at $7 or better. And as you got to mid-June, we were still better than $7. It's when we got past June. If you would have asked me in June, given the kind of the struggles with spring, and fast forward to August 25th, I'd probably say, I don't imagine if you're telling me that the yield is 172, 173 bushels, that we're going to be at 750. But I would have imagined, or I probably would have answered, probably around 650, where it sags. The market's anticipating more supply, but it's not enough supply in the big picture. In particular, if you kind of look at where I think the war is headed right now, I think it's getting worse. The drought conditions in China are growing. Europe, we know, struggle with drought, so it's not It's not just the U.S. that has had some pockets, but the entire northern hemisphere. Um, so with 650 corn, though, you're not going to get this hand over fist buying, and we saw that again with slow export sales again today.
Yeah, and you brought up export sales, and I know USDA went to a bit of a new reporting system there, so it's a little while to figure that out on Thursday morning. But you look overall at export sales, Brian. Anything stand out of note to you, either good or bad there?
Just that they slow down in summer, and at high prices, the end user will kind of try to get by with what they have until the harvest season. I think with some hindsight, importing countries or feed buyers here in the U.S. are probably looking back, that kind of that harsh sell-off end of June into July and wondering, maybe I should have got a little more aggressive here. But and they're probably saying that because it looks like the um, expectation, at least, is that there will be supply available to the marketplace. What's going to get interesting is the year ahead. So I wrote a paper yesterday called The Weekly Perspective. In that paper, I kind of highlighted bigger picture things, Jesse, that I think when we look long term, one is this whole war and what it's doing to natural gas prices and nitrogen production in Europe and maybe elsewhere around the world. That's a big story, and it's developing. Things are not better in that front, I don't believe. The second thing is, another variable is the high U.S. dollar. So that's been a wet rag over the market. The dollars just continue to grind up. Had a big surge here the last couple of weeks. You've got that, but I think the other big story is just the inconsistent and shortfall of crop production in the northern hemisphere puts this magnificent pressure on the southern hemisphere to come through with big crops, or we're going to see this continued volatility, and it looks likely that will continue. Now the volatility continues well into next year and maybe all the way through 2023, unless we can northern hemisphere really make up for some crop shortages. The southern hemisphere, if they have good crops, soybeans in particular, double crop corn, maybe that's a start to make up. But there's some weather prognosticators saying, hey, look, this La Nina pattern seems to be in line again for the year ahead. Last year we saw what it did to Brazilian beans. So it's going to be a lot of back and forth in the marketplace for sure.
You brought up Europe and that situation. I'm glad you did. I want to segue there. Just maybe think about this for a second and get your thoughts as well. Obviously, yes, that situation developing. We don't know where it's going to go. A lot of farmers worried about the cost of inputs for 2023. So if I'm a farmer looking at my marketing strategy and I see December 23 corn on the board around $6, soybeans November 23, that 1360-ish range, is it a good idea to find, locking in a little bit there, or is it almost a wait and see approach still if you're looking at 23, just because of all these global unknowns when it comes to the cost of fertilizer, input prices, et cetera?
I think you hit the nail on the head. It's both. You start locking in some, but you don't jump with both feet. Everything's, again, relative. If 3 years ago we said, gosh, you could get $6 corn, you'd run like a rabbit and lock it all in. I had so many farmers, if I could just get $4, that's it, I'm happy, right? Well, inputs change, everything changes. I'm not sure $6 on the board is really making anybody happy. It's just one of those prices that you probably should do something. Personally, maybe I'm a little too greedy right now, but I think 650 and on these 23 corn, I look at that Nove 23 bean. Boy, I'd sure like to get maybe 14.50 out of that. $14 at a minimum, 14.50. But the old saying is, you hope your first or your worst. So at some point, you got to get the ball rolling. And then if the world would rebound, those early sales may be very important. They'll act like a pulley on your average price over time and help pull up out of that bottom range. But this, to your point, this kind of uncertain worldwide marketplace and then uncertain input structure. If you're a farmer out there and you're feeling like you don't know what to do, you are definitely not alone. And you are in good company, because there aren't any easy answers right now. I would say until we really see definitively that we're going to see some crack in the input structure or see a better, you start talking to your dealerships and they say, yeah, we're, this problem with getting parts. That's no longer a problem. We get all the parts you want, or we start thinking that things are getting back to some sort of supply chain normal. But right now, there's still nothing normal about the supply chain.
Bryan, as well, wheat markets real quick. Thursday's drought monitor showed some improvement in the southern plains. We've seen all that rain down there. You look at that with winter wheat planting coming up. Also, we've obviously, again, taken a lot of this war premium out of the markets. Any thoughts in this wheat market just in general, looking at those factors?
Well, if we turn this way and look, it's very bullish. We're at 15-year low supplies in world exportable countries that have supply, and you got this mess in Europe and all this. And look over here, and it's like, oh my goodness, we've been drought in the key, winter wheat growing regions. All of a sudden, we've got a lot of moisture, or at least in most areas. So, a real relief to the idea that, hey, we've got something in the soil now, or it should be. Maybe the pattern's changing. So, I think to the betterment of marketing for U.S. farmers, even though we're still kind of in a real big downtrend, we're still historically at what's termed higher prices. So there, same dilemma we talked about in corn and beans, probably get some things done. I think the biggest factor that most farmers will tell you is a concern. And this is again my opinion when I say I think, but I think most hard red winter wheat farmers will tell you, and soft red, but the winter wheat farmers will tell you is enough moisture in late summer and fall to get the crop in and get a good emergence. They can get that far and survive, whatever winter throws at them. They got a great shot of coming out of spring and those fields just turning that nice, solid, dark green. But you got to have that good moisture in the fall.
Bryan, let's move over to livestock. You talked about that a little bit at the beginning of our chat, but it felt like at least the hog market finding a little bit of support. It's been a pretty rough week in this hog market. I was betting that we'd see that October contract go up to cash and not the opposite. Well, feels like the opposite's maybe starting to happen. Cash coming down to October, possibly. Just what's your thoughts on this hog market, again, finding a little bit of support on the board Thursday?
Yeah, I think we've come down too fast, too quick on the October contract, and while cash will likely decline into the fall, there's still such a big spread there that the likelihood is that both will converge. But I think the rest of the world who's kind of pulling for hogs to get a good bull run on those, just really disappointed that we kind of worked our way up for a solid month, get a nice inverted head and shoulders formation, fulfilled that, got up to what we might call a double top Bollinger Band, just kind of tipped over. And kind of saw the same thing, cattle, feeder, dairy, they just kind of tip over. And when you have big bull markets and big runs, what happens sometimes is anybody who's been in, they wanted to buy, they've been buying. And once they get out, they just kind of are out. And there's not a lot of new buy orders underneath the market. And that seems to what's kind of plagued the hog and cattle market. And I think the big concern there with hogs, with dairy, not so much about cattle, but that's probably still is just, I think, a growing concern. Tensions between the U.S. and China. China's trying to stimulate their economy while the rest of the world is trying to raise interest rates to slow it down a little bit. I think this China dilemma is becoming more and more of a just concern. All right, can they financially import? I've been saying for the last 15 years, I don't think price has any bearing on China. When they need, they buy. When they don't need, they don't. It doesn't. It kind of looks like they need, and they're not. There's a real concern they're not going to buy, or buy as much. So, I don't know. Let me do this real quick. I want to put things in perspective. The U.S. corn crop, as an example, if it's 15 billion bushels and let's just say it's $6 a bushel, so 6 times 15, what's that? 75 billion is $75 billion worth. That's a lot of money, but there's individuals in the U.S. that are worth that. Think of China with over 1 billion people. They really wanted to come in and buy and scoop up, all of our carryout they could. I think they're just hand to mouth right now, and I think that's with beef. I think it's with pork. I think it's with dairy. They just, they're looking at some pretty tough financial times.
Well, and to your point there, when they need, they buy. China was the top buyer of beef on the weekly export sales report out
They
Thursday.
were.
So there's a case in point right there. You look at the cattle market, Brian, you mentioned feeders a little bit, but fat cattle, live cattle trade just kind of felt like it's been drifting a little bit here. It's been holding this range still, a little mixed on Thursday. Feedlot country relatively steady this week. It looks like on price action. Any other thoughts in cattle? Any differences compared to say hogs or dairy?
It's really, for me, it's kind of broken record. Big picture, long term, we're seeing the herd decline. You've got more placements in dry weather in the feedlots, things like that. But the end all is that the herd is getting smaller, and we really saw that last month. And the USDA kind of picked away at the feed usage a little bit. You're likely to see that a little bit more on the supply and demand numbers for corn. From a bigger, let's call it bigger picture perspective, when I look at where choice select cuts are, when I look at kind of the overall supply, it's hard to be bearish the cattle market. But I was reading a report the other day. They talked about we talked about this for a long time. These sort of checkable dollars consumers had, and I read a report and they said the checkable, they're all gone. Consumers use them all. They spent and they've spent and they've spent, and all of a sudden, you start seeing things higher interest rates. Housing starts way off, so things are really in flux and dynamic. I just think the consumer is being more cautious on what they're spending money on. It takes a few months of some pretty big credit card bills to go, "Ugh, I better I better take a look at what I'm really spending on." I saw one news program, I may have shared this, where a gentleman said, it was just an interview, and he said, I got to a point in my life where I just kind of, whatever I went to the grocery store I wanted to buy, I bought. And he said, now I'm back to what I used to do. I look at the price, I compare, I put the steak down, grab the chicken. I think that's representative. Yeah.
I think it is as well. Well, Brian, great stuff as always. If folks want a little bit of advice with their marketing, I know they can reach out to you and the team there at Total Farm Marketing very easily. What's the best way to do that?
Best way, I just encourage a quick phone call, 800-334-9779. Give me a shout. Big picture perspective, we're at some pretty critical crossroads right now. So, as I said earlier in the program, if you're kind of feeling like you're lost or not sure, you're not alone. Let's just kind of talk it out, talk it through. May not have any answers for you, but may have just one or two little diamonds in the rough that all of a sudden make a lot of sense. So, always happy to help.
Well, and you can also find more at totalfarmmarketing.com. With that, Bryan Doherty, Senior Market Advisor, Total Farm Marketing. Always a pleasure, sir. Have a great one. We'll talk to you again next week.
Absolutely, Jess. Thank you.
Bryan Doherty there with Total Farm Marketing. That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.